Fine. Today is what? Today is
30.
30. Okay. What they are saying, understand. I will explain you. You have to give me answer. On January 1st, okay, on January 1st, 2012, Dustin issued 20 million convertible loan stock. Dates are very important. 1, 2000, 2000. Is it right? They have issued how much? They issued convertible. Is it convertible stock? How much is there? They have issued for how much? 20 million. What is the 3 years time? Okay, they issued for how much? 3 years time. And for 3 years time, redeemable in 3 years for how much? They are going to pay how much? They are going to pay 22 million. Is that how much they will pay? They will pay, they have taken it for 20 million, and they have paid it for how much? 22 million.
Yes.
Fine. Or convertible into, and or they can convert it into 500,000 ordinary shares. Dustin Treasury Department was calculated that the present value of the cash flows discounted at how much? Discounted at the rate of interest of similar debt is conversion is how much? 19,001. Is it 19,001? It is 600. No, it is 19,001. Okay, fine. 19,600. Okay. Now, what they are saying? What they are saying? What amount should be shown in the statement of financial position and the date of issue? This we have calculated what? This we have calculated present value of bonds. Okay. This we have calculated present value of bonds. What is the face value of bonds? Face value of bonds is how much? The face value of bond is 20 million. Is it? The face value of the bond is 20 million. The present value of the bond is 19,001,600. What they are saying, what is the amount of debt we have to show on the date of issue? Can you tell me please? What is the rule? The rule says that we have to calculate the present value of the debt first. How much is there? 19,600. Is it 19,600? We have to calculate, and then we have to deduct from the total value. How much is there? 20 million. Is that you will have a difference? How much is the difference? Please check. Very fast.
Yeah. 998,400.
998,400. Okay.
400. Yes.
This is called as
Equity.
E. Answer is what?
Equity.
Tell me.
To determine the equity.
The answer will be B.
B, yeah.
Debt is how much?
A, doctor, supposed to be A.
It is 20.
Debt is how much?
Total debt,
Yes. Present value of
20.
debt.
19 million.
19.
Equity is how much?
998,400.
998.
Answer is how much?
A, no?
The same thing we have done. You remember?
Yes.
Same thing. Nothing is there. Is it right? Next.
Yeah.
Will be here, right?
Huh?
A will be.
A.
A.
Debt is how much? Debt is 19,000. Okay, they have mentioned here debt. Similar debt without conversion option. What is the value of debt? What is the value of debt? The value of debt is 19,000. Okay, the value of debt is 19,000, and the difference is the value of equity. Total value is how much? 20 million. Is it okay, Hussein?
Yes, yes.
Is it clear?
Yes, doctor.
Next. See the thing. What we have done, we are going to do the same thing here. Okay. At the beginning, an entity acquired 6% bonds. Is it a financial asset? 970. Is it? They have 970. How the entity acquires 6%, a financial asset for 970. Beginning of the year one. Beginning of year one, opening balance. Opening balance is how much? 970. Interest receivable annually in arrears. Arrears means at the end of the year. The bond is redeemable at the end of year 3 at a premium of how much? At a premium of 3%. 6% is the rate of interest. Okay, 6% is the rate of interest. The financial asset is measured at amortized cost. What is the effective rate of interest? Effective rate of interest is 8.5. What they are asking you? They are asking you what is the closing balance at the end of year 2. If you are asking closing balance at the end of year 2, means we cannot do directly for year 2. What you have to do? We have to do for year 1 and year 2. Okay, we have to do year 1. Year 1, the same thing. Year 1, opening balance, you have the effective rate. Is it? Effective rate at the rate of 8.1%. You have interest paid. Is it that you have interest paid how much? Interest paid at the rate of 6% on the principal amount. Is that interest paid will be always on the principal amount.
Yes,
Year 1 and year 2. How much is the opening balance? Opening balance is 970. Okay, the opening balance is 970. 970 at the rate of 8.51, how much you will get? $970 times 8.1. How much you will get? Round it off. Nothing will happen. 78.57. Okay. You can put it as 79. Nothing will happen.
79. Yeah.
Okay. Now, interest at the rate of 6% on the bond value. Okay. On the bond value. How much is there? 6% on the bond value. 1,000. 1,000. Is there? What is the bond value? Bond value is 1,000. Okay. Bond value is how much? Bond value is 1,000. Okay.
1,000.
Fine. At the rate of 6%, it comes to how
Okay,
much?
58.
60. Is that same
60.
thing? 1 plus 2 plus 3.
58, doctor.
Huh?
60.
58.
60, not 6.
58.2.
Huh?
58.2. It can be 60.
No. 1,000. 1,000.
1,000.
Ah, on 1,000.
1,000
Yes,
into
yes.
6%.
0.7.
Principal amount, yeah.
1,000 into
Okay.
6%.
Yes.
How much you'll get?
60.
Same thing. 5 column equal to 3, 2 plus 3 minus 4.
989.
989. Take 989. Okay. Take
Okay.
989. 8.1%. How much is there?
80.
80. Okay. 80. This will remain 60 only. Okay. This will remain
Yeah.
60 only. Now you will understand. The more we do practice, you will be at a comfort stage. Okay. 989 plus 80 minus 60. How much you will get?
989.
989.
89020.
How much?
989020.
No.
Let's see.
989 plus 80 minus 60.
109.
I will say fast, but I will say fast means you have to do fast. Okay, when I say fast means fast plus accuracy. I will not ask you to run fast. Okay, very simple. When I say fast, take your time and do fast. Fine. How much is the value at the end of the year? 1009.
1009.
1009. Are you clear about this?
Yes, doctor.
Fine. Next. What is what they say reason? Now you will do on your own. Nothing is there. On 1st January are issued how many? 30 million 5% convertible loan stock. Redeemable at 30 million in 3 years or convertible in 1 million shares at an option of the holder. The effective rate is how much? 7%. Same thing. Question 1. What is the amount of shown in the liability in the statement of financial position for a convertible bond? We have to do only the present value. We should not do equity. Okay, they said very clearly what they have said. See the thing, what amount should be shown as a liability. Okay, on the statement in financial statement for only convertible loan stock. Okay, date of issue means initial value. Okay, initial cost. Is that initial cost? What we have to do? We are not talking about effective rate. Okay, what we'll do? We are talking only about the. Remember, I will go back. I will show you what we have done. Okay, I will show you what we have done. We have to take this working for you have done. See working for on the left hand side of the screen.
Yeah.
Is that only this much you have to do?
Yeah.
Okay, only working for only we have to calculate the present value of debt. That's all. We should not do anything else. Is that year when you are doing this, first step is only cash flow. Is that only the cash flow? The second one is discount factor. What is the discount factor? They say that effective rate is how much? Discount factor at the rate of 7%. Is that present value? Okay, present value of cash flow. This is only first step we are doing. Okay, 1, 2 and 3. Okay, now cash flow. Is it right? Cash flow. How much they are saying? 5%. 30 million. 30 million. 30 million into 5%. It comes to how much? It comes to how much in thousands?
1,500.
1,005. This is the rate of it. Is that 1,500? First year 1,500. Second year 1,500. Third year will be how much? 30,000 plus 1,500. It comes to how much? 31,500. Are you clear about this?
Yes.
Now, discount factor. How we have to calculate discount factor? Check 1 divided by 1.07. How much is there? 1 divided by 1.07. It comes to how much?
0.934.
0.9. Don't cancel that value. Okay, don't cancel that value. You got whatever the value is there on the calculator, keep it. Again divided by 1.07. Same answer, divided by 1.07. How much you will get?
We will take the present value, right?
Yeah, discount, we take discount factor, then we will multiply it.
So that present value equal to future value divide 1 plus interest rate, right?
Yes. How much you will get?
Again, doctor, 1.
1 divided by 1.07. How much you got it?
1,401.
1,401. Okay, you are doing like this? No problem. No problem. I'm here. Okay.
You can we keep it directly.
Okay, fine. No problem. Okay. I will agree with you. I will agree with you. What we have to do? I will write here. Okay. I will write here 1500 divided by 1.07. Okay.
Yes.
Next. Second one is what? 1,500 divided by 1.07 to the power of 2.
Oh, power 2.
To the power of
1310.
1310. Next, what is the third one?
It is 31,500.
31,500, 1.107 to the power of 3.
3.
How much?
25,730.
25,730.
730.
Next. Total it, how much you'll get? $1,401 plus 1,310 plus 2,5,713. Check.
Equal 28,424.
28,424. Are you clear about this?
Okay.
Is it okay?
Yes.
Simple, my dear. This is the most easiest paper. Most easiest paper. I'm not telling just to motivate you, but it is a fact. Fine. Next one. Question number 4. Can I start?
So the answer is 28424, right?
28424.
Yes.
Is it okay?
Yes, doctor.
Once you have done complete, then you say, fine, I will go to the next one.
Okay.
Okay, Hussein?
It is okay.
Next. Sharp has 5%, 5%, $1 redeemable preference shares in issue. Where after how many years? 5 years. How should the preference share capital and preference dividend presented in the financial statements of preference shares is a equity or a liability?
Liability.
Preference shares is a equity or liability. I will go back to the preference shares. Okay, we have done this. We have done this. I will just to make sure that you will have clarity on that. Okay, derecognition, preference shares is there somewhere. Debt instruments, amortized cost, debt instruments, equity instruments, financial assets, is a preference shares. Is it right? Here they have mentioned very clearly. Okay, they have mentioned very clearly. Here what it says, initial recognition for future. This is preference shares. This is compound instruments. Compound instruments, interest and say preference shares. Is it right? If see, there are two things are there. If it is redeemable or it is irredeemable. Okay, if it is redeemable preference shares, no obligation to make any payment, either capital or dividend, then it has to be classified as a equity. If it is irredeemable means you don't have any obligations. Okay, if you don't have any obligation, then you have to treat it as equity. If preference shares are redeemable, see the thing, very small difference is there. Okay, very small. If it is redeemable, it is a liability. If it is not redeemable, irredeemable, it is an equity.
equity.
Okay, if preference shares are redeemable or have fixed cumulative dividends, they are classified. Means what happens? You are going to say that yes, 9%. Is that 9% redeemable? They will write very clearly 9% redeemable preference shares, 5 years. If they say like this, then it is a liability. If they don't say anything, no conditions are there that after 5 irredeemable, just they will write irredeemable, it is a equity. If write redeemable, it is a liability. That much small difference is there. The key element is that where there is an obligation, the instrument is a liability. There is an obligation that you have to pay. Is right? You have to pay. That is the difference. Okay. When any doubt is there, you refer the videos. Okay. Any doubt is there. Small things in examination you have to be very careful when you are with respect to words. Where is that? See the thing. Now what they say, it's a redeemable. Is it redeemable preference shares? If it is a redeemable preference shares, it is going to be called as what? It is a liability.
Liability.
Is it right? If it is a now what is the answer? Tell me.
It will be option D.
It will be preference shares capital as a liability. Liability you have to take. See, this is not because it is not equity. This is not. It is not an equity. Is it right?
Yeah.
And preference shares is that whichever liability. Two options will be straight away. It will be wrong options. Okay. Two options straight away. It will be wrong option. Is that you have the how much? What is the answer? Answer is
D.
is a statement. Answer is D. Next one.
Statement. Yeah.
MacTag purchased 1 million shares, a listed company. Is that four listed company for 4 million? They have purchased 1 million shares. Is it for how much they have paid? 4 million. Okay, by the year end. By the when they have purchased it on 1st of January 2007. By the year end, 31st December, is that 2007. The fair value has gone. How much fair value is increased to 4.8 million. If the tag was disposed of the shares, brokerage fees is how much? Brokerage fees is 0.5. Okay, brokerage fees is 0.5 million. Fine, brokerage fees is 0.5 million. What they are asking us, what is the correct treatment of shares at the year end? What is the thing? See, what they have said, they have to show at the fair value. Okay, they have to show at the fair value. Fair value is how much? Fair value is how much? Always we have to show it at the fair value. Fair value is how much? 4.8 million. Okay, fair value is how much? 4.8 million. It is a short term or it is a long term?
Short term.
Is it? By the year end, the fair value has moved. If tag has disposed of the, if the tag is disposed of the shares, means they are not disposed of, means they, if they think about selling off, means it is going to be what? It is going to be a short term. Is that? It is going to be a short term. Now, if it is a short term, where how much is the profit here is there? How much is the profit you are getting? How much profit you are getting? Fair value is how much? Fair value is 2 point. What is the book value? Book value is going to be how much? 4 million. Is it right? Book value is going to be how much? 4 million. How much is the gain? Gain is going to be 0.8 million. Is it right? Gain is going to be 800,000. Is it right? 4.8 million. This one gain is how much? 0.8. This gain we have to show where? This gain we have to show in profit and loss account. Okay, what is the answer? They say if. You have to question me. If means they have not sold. They have not sold. If they have not sold, the broker fees will not be included. If they have sold, then the broker fee will come. If they have not sold, broker fees will not come. Okay, broker fees will not come. Understand point? You should ask me immediately. You should ask me why you have taken this. Where is the broker fees? Okay, where is the broker? Why you have not taken broker fees? We have not taken broker fees because they have mentioned very clearly. They say that if Mr. Tag were to dispose of the shares, if you have sold it, then broker fees of 50,000 will come. Then we'll say net realizable value, sale minus cost to sell, then all the things will come. Here they have not sold. If they are going to dispose, then the broker fees will come. Okay, so we should not take the broker fees in this case. Is that should not take the broker fees in this case. What we have to take? We have to take the fair value. This much you have to show in where? This much you have to show in the statement of financial position in current assets. Is it in current assets? Okay, we should not take the book value. Once revalued, we have to take the revalued amount, and this much we have to show in where? This much you have to show in the profit and loss account. What is the answer?
AP.
Pardon?
P.
Hold the shares of 4.75. Why 4.75? 4.8 minus 50, no. With 750 gain, no, we are not selling it off. Is it right? We are not selling it off. Hold the shares in investment 4.5 with 800 gain taken to the statement of profit. Okay, wait for a while. Hold the shares 4.1 and 8,000 gain statement. If it is long term, then we will take to statement of changes in equity. If it is not a long term, we'll take it into a profit and loss. Hold the shares of 4.7 will not come. Understand by 4.7 will not come. Answer is what? Answer is B. Understand and then tell me. Any doubt? You ask me.
Doctor, short term normally by easy way we can classify it within 1 year?
Yes, less than 1 year.
Less than 1 year, no? If it is more direct,
cycle.
They will tell you. They will tell that it is for more than 1 year. It is a long term. They will tell very clearly in the question. If they have not said, see what they are saying is that the fair value was more to if tag were to dispose of the shares. Okay, means definitely when your intention is to sell off the assets, when the intention is you sell off the asset, it is means it is a short term. But keep it in mind, if it is a long term, they will mention clearly they are purchased in 2007, now it is 2009. Automatically you should understand that yes, almost 3 years are over, 2 years are over, it is a long term. It is a long term. Now they are saying they are purchased in January 1st, 2007, and by the year end they are talking about the things. and they are ready to dispose it off. Okay, they are ready to sell it off these assets. If that is the case, definitely it is a short term. It not be a long term. Is it okay?
Yes, doctor.
Next. Tell me, if in order to hold a debt instrument at amortized cost, if there is a reason, I will go back to the thing. Which two of the following tests must be applied? We have done this. I told you. Don't refer. Which two tests we have to do?
Fair value test.
Huh?
Fair value test.
Next.
And investment opportunity test.
Mazin.
I can say Dr. B, A and B.
Which are there?
Business model and constructor cash flow.
Contract.
Yeah. All right. B and D.
Is a business model test and contractual cash flow test. Okay, contractual cash flow test. Okay, why I will refer this is I want to increase your confidence. Okay, even tomorrow when you are going to revise it, you go back immediately. The first source of reference is your test. Once you are clear, then automatically I can say that without referring it, I can say I will never say that. I will never do that. That yes, it is business model test, contractual cash flow, characteristic test. But I will not do that. I will go back to the text. I will refer that. This is the what we have covered, and these are the answers. Okay, answer is what? It is a business model test
B
and contractual cash flow characteristic. Are you clear about this?
Yes, doctor. Clear.
Fine. Is it okay about this? Now you have done financial. It is also very important. In 20 marks question, this like this you will be asked. Okay, in 20 marks question plus multiple choice. Revise it. My dear, I am telling you very clearly. Revise it. Nothing is difficult in this world. Fine?
We revised the last question, that long one.
How you felt?
Yeah. It's all right, doctor.
It's fine.
Getting more interesting. Yeah.
Is it? I will not say it is. I will never say it's easy.
Because
but once you revise, it is not difficult.
similar question they will give like this.
Yes, definitely. More or less, that is the same thing. See, ACCA is very clear. Only thing is, they will not repeat the question, but they will not change the pattern also.
Yeah.
They will never repeat any question. Okay, they will never repeat any question as such. Okay, never. But the pattern is almost plus or minus. It will be same.
Yeah.
Fine. Next one.
Fine.
Is it? Next one. This is the 10th chapter. It is a very small chapter. Okay, foreign currency. See, you are working. You know the banking system, how the currencies. You have traveled a lot. Okay, you have traveled a lot. You know how to think about it. A currency. What happens? It's here we are talking very small aspect. Is it right? What they are doing? There are two things are there. There is a functional currency. There is a presentation currency. Is that what is the difference between a functional currency? What is the difference between presentation currency? Is that you take the Omani Riyal, you will have dollars. Is it right? Anything you are doing, you will convert it into a dollar. Is it right? That's where we are making the transaction. What happens? There is a translation, for translation, exposure. Is that you have monetary assets and non-monetary foreign currency terms. Is that what will happen whenever you make a conversion? Is it right? You are translating the money. When you are translation of the money, definitely there will be some gain and there will be some losses. Not to the bank. I'm not talking anything with respect to bank. I'm talking with respect to a firm. I'm talking with respect to a business. Is that anything with it? It's a business. A small, okay. How the gains and losses will be there. They will say which is the functional currency, which is the presentation currency. Only we have to a basic simple mathematical calculations. Okay, basic simple mathematical calculations. Okay, we are doing that. When you are doing that, this is which standard we are going to use? IAS 21. Is that IAS 21? Here we are not doing anything. Is that in SBR, strategic business reporting, we will do at the advanced level. Okay, but here we are talking about the basic fundamental. What is the things? It talks about effect of changes in the exchange rate. You have same thing, initial treatment. When you are talking about initially, when they are talking about settled transactions, next unsettled transactions. Okay, there are three things are there. The first one is initial recognition, initial treatment. The second one is when it is going to be settled and when it is not going to be settled. Sometimes it will not be settled. Okay, you are purchasing the things and you are paying in different times. Okay, you are paying in different dates. Something will be outstanding, will be there. Then in that case, what we have to do? The objective is to produce rules that entities should follow whenever there is a translation of foreign currency activities. It is only individual transaction in foreign currency. See what they mentioned very clearly. What we are going to do? It is only individual transactions in foreign currency that will be examinable, that will be tested in the exam. 100% they have done in the first paragraph. They have given a clear message. Is that only means simple transactions? Is that you are talking about what? When you are talking about the exchange rate, definitely there will be a historical rate. Is that there will be a closing rate, there will be an average rate. Historical rate you take for a day. Okay, at the beginning of the day it is a opening will be there, closing will be there, average rate will be there. Is that it is nothing but the date, at the date the transaction taken place, sometime to referred as a spot rate. Is that when the transaction has been taken place, that date is called as a historical rate and closing rate. And throughout the accounting period, reporting date is 31st December. Okay, 31st December always. Is it to our understanding, to examination point of view, the same rule what we are following in our country, the same rule is happened in the ACCA also. 31st December is the reporting date, and this reporting date is very important in every other chapter. You have the average date. What are the things? Now keep it in mind. What are the monetary items and what are non-monetary items? Okay, monetary items are what are the very clearly. This we have done in one of the previous case. Cash is with that we easy converted into cash. What are the things? The monetary items are receivables, payables, and loans. That's all. 1, 2, 3. Is that 1, 2, 3? Okay. Receivables, payables, and loans. Loans. Is it right? Now, what are the non-monetary items? See, non-monetary items is what we have to take into consideration is it is also included inventory. Students are they confused. They say that current assets and non-current assets. They say that current assets are monetary items. Yes, current assets are monetary items, but excluding inventory. Excluding inventory or current assets and current liabilities, okay, or monetary items. What are non-monetary items? Non-monetary items are non-current assets plus inventory. We are taking we are removing inventory from here and we are adding inventory here. That's all. Remember this very important point. Easy scoring marks. Is that easy scoring? If there is a easy question is there, they will ask. Is that they will ask what is the non-monetary items and non-monetary items. Fine. Now It says, what is the currency? You have functional currency, you have presentation currency. Here little bit you have to be careful. The currency of the primary economic environment in which the entity or this is usually the currency in which majority of entity transaction take place. If you take our country, Omani Riyal is the functional currency. Is it Omani Riyal is the currency in which the financial statements are presented. In most of the cases, see it is, now we are talking about the multinational companies, okay, multinational companies. When we are talking about multinational companies, see what we are doing, we are functional currencies also Omani Riyal, and presentation currency in all the most of the cases also Omani Riyal. In some cases what will happen, a functional currency will be Omani Riyal, but presentation currency, you have multinational companies, okay, you take Qatar National Bank, you take the HSBC, you take Bank of Beirut. What happens? You take other banks, okay, other companies. Is it right? You take Mercedes Benz, okay, you take Benz. Benz functional currency is, if they are trading in Oman, it is Omani Riyal. But if you take Benz, what the presentation currency in their own country financial statements, they will present in euros.
Euro.
Okay, this is the difference between a functional currency and a presentation currency. Okay, that's what it says. Fine. IES says that entities should follow primary factors valid. The currency mainly influence the sale prices. The way the currency of the country whose competitive forces and regulation determine the what is the in which currency we are making the sales. Okay, the currency which influence labor, we are paying expenses also, purchasing also in that currency is called as a functional currency. Is it? What is the if the primary factors is inconclusive, then the secondary factors should currency in which funds from financing activities are generated. Is in which currency we are taking loans? Is it? In which currency? The currency in which receipts from operating activities. What are the operating activities? Current assets and current liabilities. Is that current assets and current? Means those are if these conditions are not there, then we have to check with these conditions. See, when they say conditions, okay, when they say conditions, this will be tested. Okay, this will be tested. Is that individual company transaction? What are the first? We have to take the initial transaction. First initial transaction will be taken on a historical rate only. There is financial accounting is based on historical cost accounting only. That's all. There is no other next thing. The average can be used if it does not fluctuate significantly. If there is no movements, then we will take the average. If it does not fluctuate. If it is fluctuating, then if fluctuating, if currency is fluctuating, is it? If currency is fluctuating, then we'll take the specific date rate. Is it specific? When this is the initial. When you are talking about settled transactions, is it? If the transaction is settled during the transaction at the date of payment receipt, using the historical rate prevailing at that date. We are settling now. We have to take the amount. As simple as that. Yesterday I will come to your bank and I will convert 1,000 riyals to $. Fine. Today I will come. What will happen? Definitely. Yesterday rate is yesterday rate. Today rate will be today. After 1 hour the rate will change. As simple as that. Okay. At this way, at this may be different to the initial transaction, and exchange rate difference may arise. This is posted in the where we are posting. This will be stored in the profit and loss account as a exchange difference in exchanges. Translation, foreign exchange translation reserve, gain or losses. Okay, gain or losses. In that way, we are going to definitely there will be some plus, there will be some minus. Okay, now, are you clear till now? Till now?
Yes, doctor.
Is it right? Now, what they are saying, they are giving a small questions, is right? Nothing is that much has to be Think over it. Is it right? They say that a company uses, okay, that uses dollar as its functional currency. Buy goods from the supplier who uses, see, you have a dollar and you have a chromates, okay. This is the functional currency. Is it right? This is the functional currency. This is the presentation currency. Who use, see, from a overseas company who uses chromates as a for them, for them functional currency is different, for you functional currency is different. This is you are buying and he is selling, okay, he is selling. The goods are priced at how much? The goods are priced at 54,000. Is that the goods are priced at KR 54,000. Payment is made after 2 months. Okay, payment is made on 31st May 2008. Is it? Now, first is how much? First is how much is the what they say, the transactions. Is that how much is the, what is the exchange rate? 0.8 is equal to dollars. Is that 0.8 is equal to dollar? Mean how many dollars are there? You are buying. Understand point? Are you company that uses function buy goods? Is it right? You first what you have to do? You have to convert it into dollars. 0.80. Is it right? I will put like this. I will put like this. Is it right? I will put like this. $1 equal to 0.80. Okay. How many dollars are there? No. 1 minute. $0.80. Okay, fine. No problem. Okay, I will do. See, 0.80 KR equal to $1. Okay, 0.80 KR equal to $1. How much they have purchased? They have purchased how much? They have correct. How much they have purchased? 54,000 KR equal to how much dollars? 1 minute. 54,000 divided by 0.8. No. Hmm. 1 minute. 1 minute. Just I want to make it little bit more simple. That's all. I was saying that how. It is 1.8, my dear. We got confused. We say it is 8. How much is there?
Yeah, 1.8.
1.8. We got.
And 1.75.
We got. Is it right? 1.8. 1st April. Okay. Nothing is there. We are doing rightly only. Okay. 1.8. See. 1.8 KR is equal to how much? $1. Okay, $1.
$1.
54,000 KR equal to how many dollars? Is it right? 54,000 KR divided by 0, 1 point, is it right? 1.8, okay?
0.
Is it right? 1.8 times 1. How much you will get?
30,000.
$30,000. This is on 1/4. And what happens 31/5/2008? Okay, 1.75 kr is $1. Okay, 54,000 kr is equal to how much? Is it 54,000 kr equal to how much? How much is there? 54,000 divided by 1.75 times 1. It comes to how much? Yes, Hussein.
9,4,500.
No.
Hmm.
Check again.
4.
54,000 times 1.75.
30857.
30857. Now, is it right? Now, general entries. What they are asking us? They are asking us to show the general entries. For this general entry, what they are purchasing. Okay, they are purchasing. Is it right? They are purchasing and they will pay after 2 months. They are purchasing and they will pay after 2 months. When they are purchasing and paying after 2 months, what will be their debit and what will be the credit? It is payables. Is it right? It is payables. Is that payables? Yes, Hussein. Tell me, Mazin.
Yes, sir.
Debit and credit.
Debit would be expense, exchange expense.
Debit expenses and losses. Credit incomes and gains. Is it right? Great. Now they are purchasing. Purchase is a expense. Purchase will always be debit. Okay, purchase will always be debit. As per the rule, not by as per. You should see. I have written on the left hand side. Purchase. This is the rule of nominal account. Is that purchase, debit, expenses and losses. Purchase is an expense. How much is there? We are purchasing at when 30,000. Payables. Payables is a liability. I told so many times. If liability is increasing, it should be credit. If liability is decreasing, it should be debit. If asset is increasing, it should be debit. If asset is decreasing, it should be credit. You have to pay after 2 months. Means your liability will increase. Your payables are increasing. As per the rule, if the payables are increasing, your liability increases, it will be payables. Liability is payables. How much? 30,000. Fine, 30,000. Now, what's happening? What's happening? You are going to settle the transactions. Okay, you are going to settle the transactions. Is it? You are going to settle the transaction. I will write like this for your understanding. Okay, I will write like this for your understanding. This is payables. You are seeing on the left hand of the screen.
Yes.
Yeah.
Is it? Payables. Payables are how much? 30,000. Okay. Payables are how much? 30,000. Now, what happening? You have to pay 30,000. Is it right? Now, what happens? Your dollars are increasing. Is it right? If you have paid at that time, you have paid $30,000. But you are paying after 2 months. You are paying more or you are paying less?
More.
You are paying more. If you are paying more, for you it is a loss or gain?
Loss.
It is a loss. Okay. This is the second task. This is at the time of settlement. Is that? This is at the time of settlement. In the settlement, what will happen? You are settling the things. How much? 30,000 you have to pay. Is it 30,000 you have to pay? Fine. That's why there's no doubt on that. Is it right? 30,000 you have to pay. Fine. Now how much you are settling down? You are settling down more or less?
More.
More. Is it? Yeah. How much? Now when you settle down, your liability will get cancelled. Okay, your liability decreases. Is that when liability decreases, these payables will become what? These payables will be debited. How much you are paying? You are paying how much? 30,000. Is it 30,000? But how much you are paying cash? You are paying how much? With respect to currency fluctuation, you are paying more. Is it right? Cash is an asset. Okay, cash is an asset. Asset is decreasing. Is it right? Asset is decreasing. When the asset decreases, it will be on the credit side. How much you are paying? You are paying how much? 330,875. Is that how much you are paying? 30,875. Now, if 30,875, what is the difference here?
857.
Is it? Difference is how much? 857. This difference is it is a gain or loss due to currency, foreign currency. If you are paying more, it will be gain or loss?
Loss.
Loss. Rule what it says? Rule says that debit expenses and losses. Is that debit expenses and losses? Okay. What we have to do? Debit. Is it foreign exchange loss? Is that foreign exchange loss? How much is the foreign exchange loss? 357.
800. Yeah.
Difference only.
857.
Okay, difference only. How much is the foreign exchange loss? 857 only. Are you understanding?
Yes.
Okay. Are you understanding? Simple. Is that simple? It's not only they will talk about this much only. Okay, that much. Okay. Next. Unsettled transaction. This is the settled transaction. What is the concept of if you are not settling down? Is that if you are not settling? Only the most important is general entries. General entries is the lifeline. Take my word. If you are good in general entries, you are good everywhere. Fine. Now, if the transaction is not settled on the reporting date, 31st December, there will be an outstanding asset and liability. Definitely, it is not settled. If the asset is a monetary item, what are the monetary items? Receivables, payables, and loans. Okay, receivables, payables, and loan. It should be reinstated at the closing rate. Is it? Means what is the closing value is there? We have to convert it into a closing value. If the asset is a non-monetary asset, inventory, is it? Inventory, I will write very clearly. Is it? Inventory and property, plant and equipment. It should remain in the same value. We should not change. Only monetary items we have to change. Non-monetary items we should not change. Rule is rule. Exchange difference arise whenever there is a not retranslation. When happen? Only with respect to monetary items. This should be shown in where? This should be shown in the profit and loss account. Just read 1, 2, 3, 4. Read once.
Again, doctor, what is the monetary items? Again, I just want to write it.
Yeah, good. Is it right? Monetary items. Okay, very important. Remember, we are going to come across in most of the cases. Monetary items are receivables, payables, and loans. They have not said loans are short term and long term. Loans are loans. Understand point? Loans are, it means it is long term as well as short term. Okay.
And non-monetary inventory and plant and equipment.
Yes. Is it right? Inventory and
Yes.
non. Very important. I will ask you any time. Okay? Non-monetary items. Is it right? Inventory and property, plant and equipment. Fine?
Yes.
Now, what it says, on January 1st, 2006, Wiki, a company that uses dollar as a functional currency, buy goods from the overseas supplier who uses dinar, functional currency. Their functional currency is different, our functional currency is different. The goods are priced at dinar, okay, they are dinar. Payment is still outstanding at the company. Is that they say prevailing exchange rate. Is that again you see general entries. Okay, what they are asking us, the goods are priced at 35,000 dinars, still outstanding. Means they have priced in their own value, not in our say. We have to convert. See, we are doing this. A company, it's you, Wiki company. Okay, Wiki company is. Means you have to convert it into where you have to convert it into dollars. Okay. First, historical rate, the amount, general entry. Closing amount, general entry. Okay, side by side we will write. Is that 1/1/2006? Okay, 1/1/2006. How much is there? How much you have to? $1 is how much dinars?
1.75.
Now, if you convert, how many dollars will come? Tell me. Fast, very fast. 1.75 equal to $1.
1.75.
Is it right? 1.75 equal to $1. Is it right?
20,000.
How much?
20,000.
Good. How much? It comes to how much? 35 divided by 1.75 times 1. It comes to how much? 20,000. Now, you have to write general entry here. You are purchasing. Is it right? Use the dollar. Buy goods. When you are buying the goods, what will be the debit and what will be the credit?
Purchase will be debit.
Good.
Yeah.
Is that purchase will be debit? How much? Dollars. 20,000. Okay. Credit will be payables. How much? 20,000. Okay. Easy scoring, small chapter. Easy scoring, 2 to 4 marks. 2 to 4 marks, not more than that. It will be there. One question will be in section A or section B. One point will be there somewhere in section C. Okay, 1 point will be there somewhere in section C. Now, what happens? It is on 31st March 2006. Okay, 31st March 2000. What is the value? Is it now you convert it into dollars? You convert it into dollars. How much is there? 35,000 divided by 1.9. Is it right?
Yes.
How much you'll get?
18421.
18421.
Yes.
It is gain for you or it is loss? Have you settled the transaction?
It is loss.
Have you settled the transaction? It is unsettled transaction. Is it right? It is an unsettled transaction. If it is an unsettled transaction, see, if you have paid on 1st of January, you would have paid how much? 20,000. But 31st of December, the dollar is becoming strong. Okay, dollar is becoming strong. Means if you are taking on 31st December, the value of the settlement will be 18,000. You are paying less. Okay, you are paying less. If you are paying less, for you in dollar
Gain.
terms, it is gain. Okay, it is gain.
Yes.
How much is the gain? Difference is how much?
2,000. Let's see. 1,000. 20,000 minus 1,841. 1,579.
1579. Okay, 1579. Now 1579, it is a gain. Rule is rule. Credit is income and gain. Debit is expenses and losses. Okay, debit is expenses and losses. Your payables are decreasing. Is it right? What happening? Your payables are decreasing. Okay, your payables are decreasing. If liability decreases, it will be debit or credit?
Again, doctor,
If the liability decreases,
Debit.
debit. Debit is your payables. Is it right? Debit is your, how much? Only the difference. Okay, only the difference. We are not settled the transactions. Understand what? You have not settled the transactions. Only the, how much is there? 1579. Now you are paying less. It is gain for you. It is gain for you. Credit all income and gains. Is that? Credit all income. By the time I will complete the last class, I will repeat the rules, debits and credits again and again. Credit is income and gain. What is the credit? Foreign exchange. Is it right? Forex gain. Is it right? Revaluation gain. Is that foreign exchange revaluation gain? How much is the revaluation gain? 1579. Okay, 1579. Where we are going to show this? We are going to show it in the profit and loss.
Profit and loss. Yeah.
Okay, once class is over, before we have next class, finish this lecture. Okay, finish this lecture. It will be easy for us to work it out. Are you clear about this?
Yes, doctor.
Next. Yes, Hussein. Treatment of exchange differences. If the exchange difference related to trading transaction, if it is any buying and selling, then it is disclosed in the operating income or operating expenses. Fine. If the exchange difference related to non-trading transaction, is it non-trading transactions in sometimes with respect to what? Interest receivable. Is it right? Interest receivable is a non-trading. Is it not related to purchase and sale? And similar income and any finance cost. Is that what we have to, how we have to disclose it off? Okay, how we have to disclose it off. If it is related to trading transactions, it has to be treated as operating income or expenses, purchase or sale. If it is for non-trading transaction, it is disclosed within interest receivables or finance cost. Okay, now ABC has a year end. It uses dollar as a functional currency. Always think about the company which we are telling in the first place. On 25th October, buy goods from a Swedish supplier for how much? 286. Is it 286? Fine. Now 21st October 11.16, 16th November 10.87, 31st December 11. There is a fluctuation. It is going up and down. Okay, it is going up and down. Fine, it is going up and down. Show the treatment. A payment is made. A payment is made on 16th November. The amount owed remains outstanding at the year end. There are two questions are there. If you settle the transactions on 16th November, is it? If you settle the transactions on 16th November, how much is the amount? If it is not settled, is it? Means we are clubbing the question number 1 and question number 2 in question number 3. Okay. Now, first what you have to do, we have to calculate the initial, is that initial date. Point number A, okay, initial date. We have to calculate the amount, we have to calculate the, what they say, they are talking $1 equal to 11.16. How many KR is there? How many KR is there? One. How many KR they have purchased?
Yeah, or Sweden.
Swedish krona.
Yeah.
Swedish krona. How much is there? 286. Is it right? 286. Fine. Now, in order to convert it, how much? What we have to do?
Divide
By I will write. See the thing. I will.
yeah.
Is it right? I will write. 11.16 is equal to $1. Okay, 11.16 is equal to $1. 28286 is equal to how many dollars? 286 divided by 11.16 into 1. How much you'll get?
Wait, 6. 25627.
$2 25627. Okay, write general entry. They have purchased. Is it right? They have purchased. What will happen? Debit and credit. They have not paid.
Purchase.
This is the initial date. When? 25th October 2001. What is the general entry?
Purchase.
paid, right?
Debit.
Purchases is debit. Credit,
Payable accounts.
payable. What is the amount?
25,624.27.
Don't forget to write the currency. Currency is very important. If you do everything and you are not writing currency, they will not give marks. Okay, very simple. Okay, they will not give marks. 267. Okay, 25627. Okay, now the second one. Okay, at the time of settlement, it is point A only. Okay, when it is settlement, it is settled on 16th of November. Is that 16th of November? How much is the dollars? Convert that into dollars. What is the rate? 10.87. Is it right? 286 divided by 10.87. How much you will get?
10.87. 86. 10.87. Uh, 86.
Fast.
26310.
26
310.
26310. Is it right? They are settling. They are paying more or they are paying less?
Pay more.
If they pay more, it is a gain or loss?
Loss.
Loss.
Gain.
Huh?
Gain or loss?
Loss.
If you are paying more, you will give, if you pay on first time, it will pay how much? 24,627. If you are paying on 16 November, how much you are paying? What is the difference?
25627 minus 26310. 683.
Now, what is the general entry? Settlement.
Settlement, yeah. Payable.
Good. How much you are paying?
25627.
Good.
And debit foreign exchange.
Loss.
683. Yeah.
Foreign exchange loss. Okay.
Yeah.
How much is the
Yeah.
loss?
683.
Is it right? How much? 683.
Yes.
Yes. Understanding, Hussein?
Yes.
Next. What is the credit?
Cash.
How much?
Total amount.
Yeah, total amount, which is the 26310.
Okay. This is the first part. Are you understanding now?
Yes, doctor.
B. If outstanding. Is it right? If outstanding. If outstanding, the first initial date will remain same. Okay. Initial date, this will remain same. Okay. This will remain same. How much? 25627. Okay. We have to know as on 31st December. Is that how much is the 31st December? I'm doing in a shortcut. Okay. I'm doing in a shortcut. Okay. 286 divided by how much is there? What is the value? 11.02. It times $1. How much will get? Very fast.
Yeah.
How much?
286. 11.02. 25952.
25952.
952.
Payables are increasing or decreasing?
Decreasing.
How decreasing? Payables are how much?
Increasing the payable.
Increasing.
256,
256. Yes.
Difference is how much? Difference is payables increasing.
25625 minus 25952. 327.
25952 minus 25627. How much? What is that?
327.
327. Now, what is the journal entry? Unsettled transaction. Your payables are increasing. It's a loss or gain?
Slows.
When unsettled, I am writing this. When unsettled transactions, is it? When unsettled transaction, journal entry only for difference. Is that only for difference? This is when? This is for unsettled transactions. Is that? This is for unsettled. Now what payables are? This is a loss. Is it right? Your payments are increasing. It's a loss. Is it right? Debit will be what? Debit will be profit and loss. Foreign exchange loss. How much?
The different 327.
Credit will be what? Payables are increasing. Is that payables are increasing? How much is increasing? 327. Credit, when liability increases, it should be credit.
Yes.
Is it clear to you?
Yes, doctor.
Is it right? Fine. Are you, tell me very simple. Is it clear to you?
Yes, doctor, clear.
Hussein.
Yes, doctor.
Next. Non-monetary items. Is that what we have to do with the non-monetary items? Okay. Finish it off. If this, you finish it off, it will be easy for us to. Now, see, now you can have more clarity. We think that there are more number of lectures. It's not like that. The moment you go forward, automatically the time will be taken very less. But without doing beginning chapters, you cannot do next chapters. Fine. Now, what they say, revaluation. Is it non-monetary items had held at cost or initially transacted at historical rate and carry forward at this value only. They are not retranslated. Non-monetary items should not be retranslated. Revaluation. Non-monetary items are carried at the revaluation. Is it? If they revalue it, is it? If they revalue it. Sometimes what will happen? Initially transacted at historic. When revalued, the fair value will incorporate the exchange rate. Whenever there is a revaluation, what is the rate on the date of revaluation? It happens. If revaluation, then only applies. If there is no revaluation, no. Is it? Gains and losses are on exchange are not separately recognized. This IAS in second chapter. Okay, little bit second chapter. In the second chapter, we are taking the concepts, but we are adding the exchange flavor in that. Okay, in the second chapter, we are actually adding the exchange flavor in that. Fine. Are you clear about this?
Yes.
Is it right? Now on this, that nothing is there. Is it right? On this, there is no questions are there. Okay. On this means you have three questions. Simple one. One is settlement. One is one is a settled transaction. One is non-settled transaction. One is the combination of settled and non-settled. Okay. Only three examples are there. Are you clear about this?
Yes, doctor.
Fine. Where is one? Now, we will complete this. Okay, we will complete. An entity based in the US sold goods overseas, 2000. Based in US, sold, sale means receivables. Okay, when the exchange rate was how much? This much. Is it? The customer paid on 2003. Is it? They have sold it when? They have sold it on March 2003. They have paid in April when exchange rate was this much. The exchange rate at the year end 30th June is this much. Is it right? The exchange rate is at much. What they are asking? Prepare general entries to record the sale of goods by the US entity. How much they have sold? Sold goods of KR. Okay, 200,000. Okay.
Yes.
Now, what is the exchange rate? Exchange rate is how much? 0.65.
0.65.
Okay. Now, is it? See, I am writing for your convenience. 0.65 KR equal to $1. Is it? 200,000 KR equal to question mark. 200 divided by 0.65 times 1. How much you'll get?
Uh, 200,000. 200,000 divided by 0.65. 307692.
307692.
92. Yeah.
What is the general entry that we have to write? This is dollars. Okay. You have sold it. Is it right? You have sold it. You didn't receive money. Okay. You didn't receive money.
Yeah.
If you have sold it, it is a income for you. Okay. It is a always sales will be credit. Okay. Always sales will be credit. Okay. The sales will be credited. How much is the sales or revenue? Both are same. Don't worry about that. Okay. Sales or revenue. How much is there? It is 307692. You have not received. Is it right? See what will happen? Credit sales. Is right? Credit sales will give to what? It will give to receivables. Receivables will give it to cash. Is it right? Now you are not receive. You will receive in future. Okay, you will receive in future. Means what happens? It is your receivables. It is an asset. Is it right? Receivables is a current asset. When the current are increasing, is it right? When the current asset increases, it will be debit. Debit will be what? debit will be receivables,
Receivable, yeah.
dollar, right? Symbol, currency symbol is very, very important. Is it? This is answer to 1. Okay, this is answer to 1. Is it? This is answer to 1. Now they are making a payment. Okay, they are making a payment. How much they are paying? Making it in the same rule. Is there? Nothing is there. How much they have to make when they are making payment? They are making payment in the month of April. How much is the KR? KR is 200,000. What is the exchange rate is there? April
0.070.
770. Okay. How much dollars will be there? Dollars will be how much?
285714.
Now they are paying more or paying less?
They are paying less.
They are paying less. Is it? If they pay, sorry, is it? Is it? They are paying more or they are paying less? See the thing.
Less.
No.
Yeah, less.
To record the payment. Yes, to record the payment. Okay, fine. Sold goods to overseas. The customer paid when the rate was here. When the payment, okay, this is for the payment. Okay, how much you have? They have paid. They have paid how much? 284.
Yeah.
They paid means how much you have to receive?
307692.
How much actually how much you see? 1 minute. 1 minute. Okay, 1 minute. How much you have to receive on one where is that? Which date it is? 28th. This is 28th. Okay, this is 28th March. Okay,
March.
2003. Okay, 28th March to 28th March. How much we have to receive? 28th March 2008. We have to receive how much? 307.
Yeah.
Is it at 307? I will write here only. Okay, 307. Is it 307? 307692. Okay,
Yeah.
307. Now in April, how much we are receiving? They are paying how much? More or less? They are paying less. Means we are also paying. We are receiving less. Okay, we have to receive 307, but we are receiving how much? This is the amount we are going to receive. What is the difference?
21978.
21978. We are receiving less or more?
Less.
Less. If we are receiving less, it is a loss or gain?
Loss.
Loss. If it is a loss, what we have to do? We have to make debit. Is it right? We have to make debit. How much we are receiving cash? We are receiving cash how much? 285.
2857.
Receivables how much we have done? See, first you have to make receivables credit. Okay, because is that receivables credit? How much is the receivables? 307692. Okay, how much you are receiving cash? Debit, how much you are receiving cash? We are receiving cash of how much? 285,714. Put dollar sign. Okay, put dollar sign. And how much is the loss? There is a loss, is it right? Profit and loss account. Is it loss? Foreign exchange loss. Okay, foreign exchange loss. Okay, from where we got this? We got from here. Is it right? How much? 21978. Are you clear about this?
Yes, doctor.
Yes, Hussein.
Yes, here, doctor.
Point number 3.
Oh,
If the amount of outstanding at the year end, what is the gain? Only when it is outstanding, we have to take the difference. Understand, but whatever we have done, you should never what the follow. Now, what first you have to calculate what is the outstanding. How much is there? KR is equal to 200,000 divided by what is the value at the 30th June? 0.75. Is it right? Into $1. How much you will get?
Two six 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 six.
266667. Okay?
7, yes. Fine.
Dollar. Put dollar. Okay? Now it's we have to take only the difference. Okay? We have to compare with the compare with the 28 2003. Okay? 28 2003. What is the value? 307692. Okay? 307692. 30 June 2003. What is the value? 266667. How much is the difference?
Okay. 307,692 minus 3076. Okay. Yeah. Uh, 41025.
Receivables are increasing or decreasing? Receivables are how much? Receivables are more. Now on 30th June receivables are decreasing. Is it right? 307 comes to 266. If receivables here, what's happening? The receivables are decreasing. Is that receivables are decreasing? Means you are going to receive less. Is that you are going to receive less? It is a gain or loss for you?
Loss.
Loss. Debit will be profit and loss account. Foreign exchange, foreign loss. How much? Only the difference.
41025.
Next. Credit will be what? Your receivables are decreasing. Is that?
Yeah.
Asset is decreasing. When asset decreases, credit will be receivables. 41025. Is it okay?
Yes.
Yes, Hussein. Are you understanding?
Yeah, doctor.
Okay? If I am fast, tell me. I will be little slow. Okay? Only we three are there. Nobody is there. Okay? Now, can I go to the next one?
Yes.
Yeah, sure.
An entity based in the US purchased goods to 200 on March. The exchange rate is 0.61. The exchange rate of the year ended is what? 0.7. If the goods were unsold, what should be the value of inventory? You have to tell. I will not do.
Full
No, first we make journal entry.
They are not asking anything. They are asking what is the value of inventory only.
value. The
No
full
general
amount,
entry.
The 2000.
No general entry.
30, doctor. 7692.
30. When is 307692? Which date?
And the first date.
No. See, 1 minute. Okay. I will agree with you. Okay. 28th,
Yeah.
28th March, how much? 28th March 2003. Is it right?
Yes.
Same thing they have repeated. They have not done anything. The same previous questions only.
Yeah.
0.65 equal to how much? Same thing they have done. They are
Yeah.
making 307
307,692.
692. Okay, and
Yeah.
they say they unsettled. Okay, 30th June is unsettled. Okay, 20,000 divided by only amount we have to take. Okay, 0.75
Yes.
into 1.
So
How much will come?
266,667.
266,667. Difference is how
Yeah.
much? 41025.
41025. Hmm.
Is it right? 41025. What they are asking? If the goods were unsold at the year, what should be the value of inventory? They are not asking us gain or loss.
Hmm.
They are not asking us gain or loss. They are asking us what is the value of entry. Which value we have to take? 31st December, 31st June, 30th June, sorry.
Yeah.
Which value we have to take?
266,667, right?
Good. Is it okay, Hussein?
Yeah.
Is it? This is the value of inventory. I will write here, okay? It is not clear. Next.
Let's write this one.
An entity bought land on credit 100 when the exchange rate was 0.85. At the year end, the land is a non-monetary asset. Okay, land is a non-monetary asset. If they revalue, then we have to take. If there is no revaluation, we should not take. Is it right? At the year end, the entity has not paid the supplier. The exchange rate of the year end was how much? You have not paid. See the thing. You have not paid means it is non-monetary item purchased, but it is in the form of non-monetary. Okay, payables. Is it? Not paid means what? If it is not paid means it is going to be payables. Now you see the thing. Little bit difficult. Not difficult, you should understand. Okay? An entity bought, this is a non-monetary asset. Is it right? This is a non-monetary asset. And this is a monetary asset. Is it? Now, how much, which three of the following amounts be recorded in the financial statements? It is payables, okay? It is payables, fine? It is payables. First you should know how much is the payables, okay? First you should know how much is the payables. Payables at the year end, okay? Payables at the year end. Fine, payables at the year end. How much is the payables at, what is the year end value?
0.92.
0.92. What is the KR equal to 100,000 divided
yeah.
by KR divided by KR, it will become dollars. Okay, KR divided by KR, if you divide by the same exchange rate, it will be other currency. Okay, how much is there? 0.92. It is closing. Okay, it is year end. How much you will get?
Okay. 108695.
An entity bought land for KR and the exchange rate was 1 KR equal to 1 KR equal to 0.85. 1 KR equal to 1 KR divided by 0.85. 1 KR divided by 0.85. At the year end, the entity has not paid the supply. The exchange rate at the year end is 1 KR equal to this much dollar. 1 minute. 1 KR equal to how much? 1 KR equal to 0.85. Okay. 1 KR equal to 0.85. 100,000 KR equal to question mark. Okay. We should not do like that. Okay. 1 KR equal to 1.85. Okay. 1 KR equal to 100 KR equal to question mark. 100 KR divided by 1 KR. Okay. Times 0.85. How much you will get? See, 1 KR, is that 1 KR equal to how much? $0.85. Then it comes to how much?
A 85,000.
No, check. Okay. Is it how much? 85,000. Is that 85,000? Fine. This is where we have taken, this is bought a land when the exchange, this is the beginning value. Okay, this is the beginning value. 1 minute. This is the beginning, initial cost. Is it right? This is the beginning value. Closing reporting date is how much? Reporting date is how much? 1,000 KR, 100,000 KR divided by, what is the value is there? 0.92.
92.
Sorry, again we are doing the same thing. Okay, we are doing the same thing. How much? It is not divided by, is it right? It is multiplied by 0.92. It comes to how much? $92,000. $100,000 into 0.92, how much? 92,000. Is it right? Yes, Hussein. Where are you?
Here, Dr. Here.
Is it clear?
Yeah.
Tell me very clearly. I can sense from your sound voice. See what happens, they have bought a land, KR, 100,000. Is that exchange rate was how? If you give 1 KR, how many dollars you will get? If you give 1 KR, you will get how much? $0.85. Is that? If you give 1 KR, you will get how much? Less dollars. If you are having 100,000 KRs, you will get how many dollars? 85,000. The value of the dollar is 85,000. So at the reporting date, what happens? If you are giving 1 KR, is that you are getting 0.92. Is that if you are giving 1 KR, you will get how much? 0.92. If it is 100,000 KR, how much you are getting? You are getting 92. It is not paid. Is that bought a land? When you bought a land, it is payable. The opening value is how much? The opening value of payables is how much? This is the opening value. Opening balance of payables is 85. This is the closing balance. Is that closing value of payables? 92,000. which three of the following amounts would be recorded in the statement of profit? Now, which three amounts will be recorded? You got profit or loss here? You are paying more or you are paying less? Payables are increasing or decreasing?
Payable increase here.
Payables are increasing. Payables are increasing means it is a loss. Okay? Payables are increasing means it is a loss. Fine? It is a loss. Okay? Profit and loss account. Now, tell me what is the answers?
I think C, doctor.
What is foreign exchange loss? How much is the three answers are there?
Yeah. This is one, 7,000.
Okay. Next. Another one. Another two.
Trade payable, 92.
And foreign exchange loss.
Yeah, 7,000 we have taken that.
Yeah, yeah.
There is a loss. 7,000 is
And
there.
Yeah.
and property and plant equipment, 85.
Is it A, C and E?
A.